it's a good investment, and I lost all my money. It had the SEC's seal of approval. They don't do that. They don't tell you that, hey, this company is going to work out, right? That's part of the disclosures. You can't say that the investment's going to be good just because the SEC has approved it. They've just said it's legitimate. We've done all the things that the SEC requires, but you invest at your own risk because the SEC doesn't know about the market, right? Things can go wrong. The business model might not work. So just because the SEC is allowing the IPO, it doesn't mean that it stands behind the investment merits of what is going public, right? But I think that if you are an investor and you buy an initial public offering where the SEC has given the company the green light to go public, how can that same SEC a couple years later file a lawsuit against that company claiming that what it's doing, which is exactly what it said it was going to do in the prospectus that the SEC allowed? They're filing a lawsuit because Coinbase is doing exactly what it told investors and the SEC it was going to do before it went public. If what Coinbase is doing violates securities laws, why didn't the SEC say something before it went public? I mean, they obviously looked over what they were doing. If they were trying to bring public an illegal business, that was the time to say something about it. Because people invested in Coinbase, right? Yes, they didn't know if it was going to work out, but they at least thought what they were doing was legal. They didn't think they were running an illegal operation. But that's exactly what the SEC is accusing Coinbase of doing. They're saying Coinbase is running an unregistered, unlicensed securities exchange. Well, that's exactly what they were doing when they went public. They haven't changed their business model. It's the same business model that they reviewed when they approved the IPO. So to say that the government is going to basically sucker all these investors, allow them to buy stock, and then come and pull the rug out from under them and say that it's illegal. Look, that's another department that we should get rid of, the SEC. I don't think we should have an SEC. I'm not sure how many people work there, but we can save a lot of money. Let's get rid of the SEC. Let's get rid of FINRA. That's another regulatory body, which is not even part of the government. It's a private body that the government requires all brokers to be a member of. So I guess that wouldn't save the taxpayers any money because it's the investing public that has to pay the cost of FINRA. But the taxpayer does pick up the tab for the SEC. So if we're looking for ways of saving money, let's get rid of the SEC because clearly it's worthless. Because if what Coinbase is doing is so bad, why didn't they say so a couple of years ago? Why are they allowing the company to go public only to come back and say just 2 years later that what they're doing is wrong? Anyway, another thing, a topic I just want to discuss, because there's a lot about the commercial real estate market. I've talked about it. I've warned about it. So a couple of days ago, I went down to Yahoo Finance. I did an interview there. I'm not sure if they've posted it yet, but I did this interview. And when I showed up at Yahoo Finance, the guy that was there gave me a tour of their office. Very beautiful office in a high-rise building, lovely building. And this is a Monday. I'm there Monday at about 2 o'clock. Right? It's not a holiday. It's just a regular Monday in early June. Right? Everybody is supposed to be at work, except nobody was there. The place was completely empty. I actually took a little video and I posted it on my Instagram. Remember, I couldn't post the video on Twitter because I'm locked out of Twitter, but it's on Instagram, so you can check it out there. And by the way, again, as I said at the beginning of the podcast, follow me on Instagram and Facebook because that may be where I put content for a while I wait for Twitter to let me back on their platform. But I took this video of all of this empty office space. There wasn't a single person there. And the guy told me that before COVID, every desk that you see in that video had a person sitting there and working. It was very busy. There was this large cafeteria that they had just so, a perk, because if you worked there, you got all this free food. There was nobody there. And he said they used to actually had chefs there that would cook the food. But since there was nobody showing up, I guess they didn't need the chefs anymore. So they're not there. I mean, there's still some cold food there. I walked around. There was some stuff that I could have eaten. But there was nobody cooking anything because they didn't want to cook when there was absolutely nobody there. But the point is, what is this office space worth? Because nobody is there. You've got all these companies that have all this office space and nobody is using it. And I was able to see through the glass 4 or 5 stories down. And I could look through the glass at all the other offices that were below Yahoo, right? Totally different companies. Those were all empty too. I mean, just looking through it, empty desk after empty desk, nothing on the desks, nobody walking around in the hallways, just a complete ghost town. And this is before AI. I mean, people are working from home, but what about once we fully implement AI and people can use AI instead of employees? Obviously, if you're going to have a bunch of AI, you just need one closet where you put all those servers and those CPUs or whatever it is that you need to run the AI, right? You don't need a nice big office with beautiful views, and you don't need a cafeteria to feed your AI, right? They'll work 24/7, right? You just need the power to keep them going. So what's going to happen to this commercial real estate market when you've got big increases in interest rates? I'm here in the UK. Short-term rates in the UK are over 5%. You know where they were a year ago? They were 0. So they've had a huge move. And you know what they don't have in the UK? Fixed rate mortgages. Now that's going to residential. They don't have that. No, maybe people have 5-year mortgages here. They don't have 30 years like we do in the US. So, but in commercial, everywhere, nobody has 30 years really. It's a lot of short-term debt, 5-year debt. A lot of that stuff is maturing. So you own a commercial building. Your rents are collapsing. And even if they haven't collapsed because your tenants were locked into leases, what's going to happen when those leases mature? Are your tenants going to renew? Of course not. They don't need the space. So rental income is going to collapse. At the same time, interest rates are going up. See, commercial real estate is like a bond. The price of the real estate, the value, is a function of interest rates. The cap rate is interest rates. So if you have lower interest rates, then the present value of those rental streams is worth more. But you have a double-edged sword. If at the same time interest rates go up, your rental incomes go down, it is a perfect storm for the real estate market. And again, add to that the AI, which may increase or decrease rather the demand for commercial real estate, on top of the fact that so many people are now working from home. You're going to see a crash in the commercial real estate market. Now, that also has broader implications for the banks and other lenders who are not going to get repaid, because a lot of this commercial real estate has debt attached to it. And so the values are likely to fall so much that the losses are not going to just accrue to the owners of the commercial real estate. They're going to accrue to the lender, because once you've exhausted the equity. Let's say I bought a building and it was worth 200 million and I had 100 million of debt. I was like leveraged, 50% debt. And so the bank probably thought that was a pretty secure loan, right? We've loaned $100 million on a $200 million office building. But if that office building is only worth $50 million, the owner doesn't lose $150 million. The owner just loses $100 million, right? He walks away from the other 50 because that's the bank's problem, right? Because he's not gonna lose more than his equity because he just sends the bank the keys to the building. The problem is the banks own loans on a lot of buildings, right? I might be a landlord. Maybe I own one building, maybe I own two buildings, but that same bank may hold the mortgage on hundreds of buildings, thousands of buildings. So the losses for the banks are going to dwarf the losses for individual landlords of these properties. And now that has big implications for everybody, because when the banks lose money, well, what about the depositors, right? They're creditors of the banks. They've loaned their money to the banks. The banks took that money and loaded out against commercial real estate that has now crashed, and so they no longer have the security to make good these mortgages. So this whole thing is going to implode. And what does that mean? More bailouts, more money printing. And you know, when I was in Europe, I think it was two summers ago, I was looking at property. I didn't buy any, but I was kind of looking at it, and some friends of ours were looking at property, but really looking at property in Switzerland, in Italy. We were there for the summer, and they were giving out loans. I'm not making this up. And they were arranging these loans through brokerage firms, but they were actually paying you. It was a negative interest rate to buy a property. I don't remember what it was, like negative 50 basis points. But of course, remember, in Europe, right, they had negative interest rates. So you were able to buy a property and get paid to do it. Now, you had to agree to put some money up with a broker dealer. There was certain things that I had to do in order to qualify to get paid to buy a place with a loan. But it was there. And I remember thinking that this is so absurd, that the real estate market has got to be way out of whack to the extent that people are able to do this. How many people were buying properties simply because they were being paid to do it? And even if you weren't getting paid to do it, if you can buy it for free, no money down, then obviously there was a lot of demand that would not exist in a normal interest rate environment. Well, now we're beginning to have a normal interest rate environment. We don't even have one yet anywhere in Europe or the United States, because I still think that real interest rates are too low. Despite the fact that they've gone from 0 to 5%, when interest rates were at 0, most people believed that inflation was below 2%. Now they can see it's at least 5%, if not more. So we still have negative real interest rates. In fact, in the UK, right, they're way negative, right? Because I think their year-over-year inflation rate is like 8% still, or 10%, something crazy like that. And so they still have huge negative rates. But the markets are still distorted, and interest rates still have a long way to go up. So the residential market is in trouble. The commercial market, that's something that we didn't have in the 2008 financial crisis. That crisis was restricted to residential mortgage, because that's where you had the adjustable rate mortgages, the zero down, the liar loans, right? All that cheap money was concentrated in residential real estate. This bubble not only includes residential real estate because rates were at 0 for a decade, but it includes a gigantic commercial real estate bubble that has just run into the mother of all pins, right? Not just the pin of normalizing interest rates, but the workers that aren't going to the office and working from home, and AI, which is just starting, which is going to eliminate more workers. So this is a much bigger financial crisis. It's a much bigger real estate crisis. Just if you focus in on the real estate aspect of it, this is worse than 2008, except real estate is only one part of it, because you got the entire stock market, you've got credit cards, you've got student debt, you've got everything that has been impacted by over a decade of 0% interest rates. The bubble that we have now that has only started to deflate, and we've barely seen the early stages, right? We've barely seen the tip of this huge iceberg, right? When I said that with subprime, when we saw subprime, I said that's the tip of an iceberg. Everybody said, don't worry about it, it's contained. I would say, no, it's a tip of an iceberg. Well, what we've seen so far with these bank failures is a smaller tip of an even bigger iceberg. And so there's a lot more left that we're going to see once it rises above the surface level. Anyway, that's it for today. I'm going to be heading back to the U.S. early tomorrow morning. So I got to hurry up and pack and get to bed. And I will do my next podcast back in the U.S. of A. From my summer home in Connecticut. Bye for now.
Hi, everybody. So I decided to call this impromptu live webcast of my podcast based on the Fed's actions earlier today. No, I didn't realize that this is how I would be spending my day. For those of you who don't know, I am 57 years old today. And I guess this is my party, with everything on lockdown and social distancing. This is what passes for a social gathering these days. This is probably the closest thing to a party I guess I'm going to have, although I'm sure we'll have some kind of meal here later this evening at my house, but we won't have anybody over for obvious reasons. But I really wanted to talk today kind of live during the market hours, take everybody's questions again. But there's probably one thing that is spreading right now throughout the country faster than the coronavirus, and that is economic ignorance and misinformation. It's all over the place. It's gone completely viral. And I want to see if I can help put a stop to that, which is why I suggest that anybody who is watching this video blog now, take the opportunity to tell some people that that you're watching and that they should watch too, because the best thing they can do to combat the virus of ignorance is to turn off their television sets or their computers and don't listen to anything that is being said in conventional media, whether it's a news-related channel or a financial channel. I can virtually assure you that every single thing that you're hearing is wrong. I can also tell you that everything that is being debated on the floor of the U.S. Senate right now is wrong. And our leaders are now repeating the mistakes that they made in 2008. And back in 2008, I was a very, very vocal critic of the financial crisis. Of what the government did in the aftermath of that crisis. Remember, I was on television all the time predicting the crisis for exactly the reason it was going to happen. So it didn't surprise me. It surprised everybody else in financial television and on Wall Street, but it didn't surprise me at all. And I remember when they first announced the TARP, I was booked on the Cavuto show that day. He had a special live show. I think maybe it was even on a weekend, like a Saturday or something. And I was booked on live to come because I was going to talk about how this was such a mistake and how we shouldn't do it. And I remember I got down there, and while I was waiting to go on, there was some kind of bomb that went off somewhere. I can't even remember where it was. It wasn't in America, I don't think. It was in Afghanistan or someplace. I don't remember. And so they immediately cut to this coverage. And so I was about to go on. I'm sitting in my chair in the studio in Stamford. This is before I had my own studio in my house, which I also have in Puerto Rico, but I'm not using it right now. I'm just using my computer and my laptop on my desk. But I was sitting there in Stamford waiting to go on television to talk about TARP and why it was such a mistake and why we were doing the wrong thing and why it would be much better off if we just swallowed our medicine now. I was going to explain the mistakes that led to the 2008 financial crisis, why the Fed made those mistakes, and why it was compounding the mistakes now, and that the worst thing we could do was bail out those banks with TARP, that we needed to let banks fail, not because it was the easy thing to do, but because it was the hard thing to do and the right thing to do. And I was going to say, and I did say back then, that if we didn't swallow our medicine in 08, it was going to be much worse in the future. Well, you know what? welcome to the future. And, I ended up having an argument with some Cavuto that day because they cut me and they didn't put me back on. And I was quite upset that I didn't get a chance to speak because I thought I was the only one that was going to say anything valid and that was going to warn about the financial crisis. And basically, as a result of that argument, he stopped having me on his shows. So I haven't done any of those, those Saturday morning shows on Fox News anymore. But in any event, and I actually apologized to Cavuto because in retrospect, I think I got a little out of line with, my anger because I was really psyched up about being on that show. And I had, come back from the city especially to do it. And I really felt passionate about the fact that the country was making a big mistake. And I really thought I needed to get on the air, especially since I was really the only person that had been on Fox that had actually predicted it. But still, whatever I tried to apologize, but I to this day, I haven't been able to repair the rip. That's only one reason that I'm probably not on Fox. I mean, look, I'm not on a lot of other networks. I'm watching CNBC today. I haven't been on in years. And again, it is very frustrating to see these complete fools. And some of these people that I'm saying are fools are very smart people. They're just fools when it comes to their understanding of economics. And these same people who were so convinced that that the Senate needs to pass another bailout today. Well, it's the reason that we bailed everybody out in 2008 that we need bigger bailouts today. And we don't need bigger bailouts. We need them like a hole in the head. What we need to do is the right thing. But now doing the right thing is so much harder because we didn't do the right thing when I wanted us to do the right thing in 2008. And if you remember, back then, I warned that QE was wrong, that 0% interest rates was wrong, that we were going down a path that we could never turn from, that it wasn't just going to be QE1, which nobody even knew was QE1 but me, because they didn't have QE1 until it was QE2. But I knew from the beginning. In fact, I knew QE was coming before they started it. I knew what they were going to do before they did it. I wrote about it in my book, Crash Proof. I just didn't know what they were going to call it, but I knew what it was going to be. And now they won't even call it QE anymore because they're too embarrassed to call it that. So who knows what they call it, because they don't even have a new name for it. But when they did it in 2008, I said then, this is a mistake. It's never going to end. It's a monetary roach motel, more QEs than Rocky movies. Whatever the analogy was, I thought of it and I repeated it over and over again. And I said that the Fed could never get off of this once it started, that it would be QE infinity. And you know what? Now it officially is. The Fed finally came out today, which is why I'm doing this, and made that 2008 forecast a reality by officially declaring that they will buy as many government bonds and as many mortgage bonds and as much commercial corporate bonds as it takes, which means they're going to back up that truck and they're going to buy it all. The Federal Reserve is going to buy the entire bond market. And this is what I said was going to happen, because they are going to unleash a tsunami of inflation. And nobody would be dumb enough in the private sector to buy any of those bonds. And I said this from the beginning. I said if the Fed does this, eventually they're going to have to buy muni bonds. Eventually they're going to have to buy corporate bonds. I said this a decade ago, and they're doing it now. And they're using the coronavirus as the excuse. The coronavirus is going to be a scapegoat for everything that they do. But don't believe them. The reason we are so vulnerable to this economic downturn is not because of the coronavirus. I've said that from the beginning. That's the pin. The problem is the bubble. All bubbles find a pin. Doesn't really matter what it is. Now, I didn't foresee this particular pin. I mean, this is really probably one of the worst pins that any bubble could have found, but it didn't matter. But the problem is, had we done the right thing in 2008 and let businesses fail back then, let people lose money back then, far fewer businesses would be failing now. Far fewer people would have lost far less money than they're about to lose. And it's not a question of how much money people are about to lose. No. It's much worse than that. What we're going to suffer as an economy is far worse than losing your money. Because you know what's worse than losing your money? Having your money, but your money losing its purchasing power. That is the worst thing that can happen. And that is what's going to happen. Hyperinflation has gone from the worst case scenario to the most probable scenario. And that means people have to act quickly to protect themselves. Because, had we done the right thing? The last stop prior to being in Athens, where I am right now, was in Santorini. And it really is beautiful. It's been a long time since I've been to Santorini. And it is the most beautiful of the Greek islands, I think, of the ones I've been to. And so if you're looking for a place to go in Greece, I would highly recommend it. It is very hot here right now. There's a heat wave. I tried to visit the Acropolis. We went to the museum, which the last time I was actually in Athens was a while ago. This museum was not even here. So I was able to see this museum this time. It really is a good museum. But I wanted to take my wife up to the top of the Acropolis, where you have the Parthenon and some other structures up there, thousands of years old. Yes, it's very hot, but we, like a lot of other tourists who were here, were lined up at 5:30, which was when the Acropolis was supposed to reopen. And we were informed that the government workers who collect the tickets, and we'd actually already bought our tickets that day. We went online, to skip the line. We paid for the tickets to climb up top there. And we were informed by other tourists. There was no official mention. They didn't even bother to put up a post that government workers decided to go on strike because it was too hot. Now, I read an article about it, and these government workers were claiming it was 113 degrees. It wasn't anywhere near 113 degrees. I was there. I was looking at, my weather app, and it was 98. It was, obviously it was warm, but from what I could tell, the government workers were going to be in these little, rooms that were sheltered. They were in the shade. Maybe, I don't know if they had air conditioning or they had fans, but it wasn't that hot. I mean, there were plenty of tourists that were going to brave the elements to pay money to climb up to the top. And we had been walking around all day in that heat. It's not that bad. And of course, if any of them had to stand in the sun, they could have, had an umbrella, parasol, whatever, and they could have stayed in the shade. It wasn't that big a deal. There are plenty of private sector workers who showed up to work in Athens. It wasn't like, nobody was in the stores. We were going to restaurants. Somebody had to deliver the food. So people who, collect paychecks in the private sector, they had no problem braving the elements. But these government workers just decided that they're going to take advantage of the hot weather to have a vacation with pay and really don't care, about the customers. And, this is another problem with government and socialism. In capitalism, the customer is always right because the customer can take their business someplace else. And when you are running a business, you need customers. You can't piss off your customers. Even if they're wrong, they're right. That's where the expression comes from. You got to suck it up, right? And you got to accommodate the customers if you want them to keep coming back, because under capitalism, it's all voluntary. None of your customers have to do business with you. They can do business with one of your competitors. And so you got to treat them nice. Even when they're wrong, they're right. The beauty of capitalism, right? Everybody is out to please you. Everybody wants to satisfy you because they don't want to lose your business. But government is all about force and coercion. They don't give a damn about the customer, the taxpayer. So when you have a government-run attraction, doesn't matter. They could be as rude as they want. They could just, not show up. You had a lot of people, very disappointed people, who came to Greece, came to Athens. They wanted to see this attraction. I talked to several people, who couldn't come back tomorrow just in case these government workers decided they didn't want to go on strike. Same with, my wife and I, we're leaving tomorrow morning. So this was our one opportunity, to see this, attraction. it's not like we're in Athens all the time. It's a long way to travel to get down here. And there are some other people that, may never come here again. And they wanted to, go up there. You would think tourism is a big industry in Greece. But again, governments don't give a damn. It doesn't matter. It's not their money. They couldn't care less. It's the taxpayers' money. They don't care if you take your business someplace else. They don't make any money on it. See, if I'm a businessman, I need to earn a profit. I need to stay in business. I'm going to make sure my workers show up, and my workers know that they need to keep me in business so they can keep their jobs, right? The workers understand how important the customers are, because without the customers, they don't have a job. But when you work for government, it doesn't matter about the customers. The taxpayers are going to pay your salary whether you have any customers or not, right? That's why, you go to the post office, although even postal workers, I think, will work in the hot weather, right? That's, their motto. I mean, it's sleet and gloom of night, or I forget what the Postal Service motto is, but they don't care about the temperature. So they'll deliver the mail even if it's hot. But if you work, in Athens, the hot weather is your ticket to a day off. But the government workers, it doesn't matter. They can't lose their jobs if they lose their customers, because they're going to get paid no matter what. They're going to get paid by the government. The bill is being passed on to the taxpayer. So that is a little lesson today. I recorded a short Instagram. I don't know if you don't follow me on Instagram, you should do that. I mean, I come up with some interesting stories that I put out there on Instagram. I don't have nearly as many Instagram followers. I have over 100,000 of them, but it's nothing like, close to the million followers I have on Twitter. But it's still worth following me over there, because I put up some interesting content, like the video that I did, live today from the foot of the Acropolis. Some people have been following my wife on Instagram, and she posts a lot more stuff. A lot of our vacation is up there, although a lot of the stuff are stories, so they're only up for 24 hours. So, they go away. I don't know, maybe she'll post some longer videos. I know a lot of people who follow me have followed her, but most people haven't figured out, which site is hers. But if you're able to do that, you can see a little bit more of my vacation. I think it's Metaphor Love or something like that is her handle on Instagram. Anyway, I want to kind of get into today's podcast. Though first, I want to talk a little bit about the markets, because we finally saw some weakness in the NASDAQ, mainly yesterday. It was on Thursday, although the NASDAQ actually dropped again today. It wasn't a big decline, but on the heels of yesterday's big decline, the fact that we didn't get a bounce in the NASDAQ may be significant. And in fact, the NASDAQ was the only of major U.S. stock market index that was negative on the week. And in fact, intra-week, the NASDAQ again set a new high. And all the indexes, the Dow, S&P, they made 52-week highs. But the NASDAQ was the only one that closed the week negative. Again, it didn't get killed. I mentioned this in the last podcast, that it looks like we may be eking out a top here in the NASDAQ. And the news that disappointed the markets yesterday, I think, came from Taiwan Semiconductor. And they basically warned that sales were going to be weaker than they thought. Now, this really threw some cold water on the AI narrative, because, they make chips, and, there's supposed to be a lot more demand for chips when everybody is ramping up AI. And so this kind of let some air out of that bubble, and we saw a big drop. But also we saw warnings, I think, coming out of Netflix, which had a big drop on the day, Tesla. So, different companies in different, aspects, all, warning or having problems that they're looking at. And so that weighed on the NASDAQ. And so we'll see if we get some more follow through
next week. Again, I've been talking about the fact that the market is way overextended on this podcast, but also more importantly, the market is still not coming to terms with the reality of inflation. In fact, another good example of the inflation problem is in Japan. And again, not that many people are talking about the inflation problem in Japan. And it's not just the inflation problem, it's the interest rate and government debt problem. And there was a slight decline in the June numbers from 4.3 to 4.2, but still now you're talking about core inflation, right, in Japan, better than 4%. Now, for years, the Japanese government was telling the Japanese people that the problem in Japan was not enough inflation. Of course, that wasn't the problem. That was one of the bright spots of the Japanese economy, that at least they didn't have a rising cost of living, or at least the cost of living was rising very slowly. But the Japanese government said, no, we need more inflation. The only reason we don't have a stronger economy is inflation was too low. That was the lie that they continued to tell. And under the pretext of that lie, the Bank of Japan printed tremendous amounts of Japanese yen and used that Japanese yen to buy up government bonds. And that enabled the Japanese government to go into debt, selling those bonds to the JGB. The problem now is that they've succeeded beyond their expectations in raising the inflation rate, because their goal was 2%. Well, they've clearly overshot it. In fact, based on the official numbers, this is the first time in 8 years that headline inflation in Japan is higher than the US, because our headline number, not our core, just the headline, is 3%. So in Japan, you're at 3.3. That's 10% greater. But what happened the other day is the Japanese government, or the Bank of Japan, came out and reiterated their commitment to achieving their 2% inflation goal, as if they haven't done it yet. Apparently, the Bank of Japan is still not convinced that inflation is high enough to qualify for 2%, even though we're at 3.3 and rising. And so to make sure that we've got 2% inflation and it's here to stay, even though it's 50% higher than that, the Bank of Japan is committing itself to maintaining negative interest rates. They still have short-term interest rates, negative 10 basis points. In the face of rising inflation, well north of 2%, they still have the pedal to the metal saying we need more inflation. We're not convinced that inflation is here to stay. And in fact, the Bank of Japan reiterated their commitment to control the yield curve control on the 10-year JGB to keep yields below 0.5%. Now, the yield's 0.5%, inflation is 3.3%. What idiot would...
Then you buy it. So you don't buy things that you can't afford, and don't lease a car. If you're now, leasing may make sense as a business write-off. If you actually need your car for business and you can write it off, it may be a better write-off, and sometimes leasing makes sense. But for most people, they should not be leasing cars. It's a mistake. And they should not be borrowing money to buy cars. Just buy the car. Instead of putting $5,000 down on a $40,000 car, buy a $5,000 car that was a $40,000 car 8 years ago. Yes, it's not going to have all the brand new electronics, but you know what? You can't afford all that. Don't borrow money to buy depreciating assets. That's a mistake. That's how poor people stay poor, right? You want to get rich, you borrow to buy income producing, appreciating assets. That's when you borrow. You borrow to make capital investments that pay for themselves. You don't borrow to consume. You don't borrow to buy stuff. Buy the stuff that other people borrowed when they sell it, because you can buy it for 10 cents on the dollar, right? Be smart with your money, right? That's why you're listening to me. Should I worry about my broker's account, which holds the gold investments at Interactive Brokers? No. I mean, look, I think Interactive Brokers is fine. We use them. I use Interactive Brokers at Europe Pacific Asset Management. So we have customer money there. I don't think any of these big brokerage firms are going to fail. I mean, some of them might if the government wasn't bailing them all out. but they're all going to get bailed out. The government's not going to let anybody fail. Instead, the money is going to fail. That's the point I'm trying to make. Don't worry about losing your money. You're not going to lose your money. Worry about your money losing its purchasing power. That is the risk. That is what you need to guard against. None of these government protections, none of these bailouts, none of these guarantees can do anything about that. All the government can do is guarantee that you get your money. In fact, it reminds me, in The Biggest Con, my dad's book from 1976, right? My father reproduced a page out of the congressional record, and it was taken from debates in the 70s about Social Security. And they were talking about what they're going to do about it. It was running out of money and they needed to do something. And William Proxmire, who was the head of the Senate Committee on Money and Banking, he was a big senator in his day. Most of you listening to this have no idea who William Proxmire was. He was a big senator, right? And he said on the Senate floor, I'm not making this up. I read it with my own eyes in the congressional record. And I not only did I read it in my dad's book, but in his office when I was a kid, I read it in the exact, congressional record that he ordered from Congress. They shipped it out. Congress printed it, right? You can get these congressional records. They make a book out of them. At least they did back then. Maybe it's on, you can get it online now. But my dad ordered the volume that included this, right? As to have an exhibit for his book. But William Proxmire, talking about Social Security, this is what he said, and almost quoting it verbatim. He said, the United States government has an invention called the printing press, and we will use it. All Social Security benefits will be paid. They may not be worth anything when the recipients receive them, but the bills will be paid. That's what he said. So you had a senator admitting that Social Security recipients were going to receive worthless Social Security benefits. Imagine that. Yes, we're going to pay all the Social Security people with worthless money. But what Proxmire didn't point out, maybe it didn't dawn on him. If the Social Security benefits are worthless, then everybody's money is worthless, right? Because it's all the same money. So if you get a check for the government for Social Security and it's worthless, then everybody's bank account is worthless. Everybody's pension is worthless. Everybody's annuity is worthless. Everybody's cash value in their insurance policy. Everything is worthless. Everything is wiped out. It's not just the Social Security benefits that are wiped out. And this is what a sitting senator, the head of the Senate Committee on Money and Banking, admitted. And he was smart enough to know about that in the 1970s. Are any of these guys in Senate today? Maybe Rand Paul knows. I mean, how many know that we can make all the Social Security benefits worthless? That the government could use the printing press, because according to Neil Kashkari, they've been ordered to print, and there's no limit to how much they're going to print, right? It's a print fest by the trillions. They'd actually be dropping money from helicopters. The problem is the helicopters aren't big enough, and there's not enough of them. That's how much money that they're going to drop on this economy. What is going to happen to the value of that money? You don't want to find out with it. Again, it's a game of musical chairs. Get out before the music stops. Take a seat. I'm offering you a seat, a nice, comfortable seat, so you'll be sitting pretty while everybody else is broke. Hey, Peter, just got back from New Zealand, barely beat the quarantine. Ever consider doing a book signing in the tri-state area? I've done book signings. Of course, I'm not doing it now. That's like, New York is the corona capital of the country, coronavirus, and you got a lot of cases now. I haven't even been back to Connecticut. So, I'm hunkered down here in Puerto Rico. But yeah, I've done book signings. Problem is I don't have any new books out. I haven't written a book in years. I've been doing my podcasts and my YouTube videos instead. But I will make an I told you video at some point, a book, an I told you book. It's just been, it's too early to say I told you so, because I need to wait until everything comes true. And believe me, everything is going to come true. I'm 100% convinced that all my forecasts are going to come true. Unfortunately, I mean, it would be nice if I was wrong, but I'm not. I don't think so. And so far, everything that's happened over the last decade or two just reinforces that I'm right. I mean, all the stuff that's happened. Yeah, I knew this would happen. Yep, I expected this. Yep, all this stuff that people are like, oh my God, that's completely surprising the hell out of people. None of it surprises me. All that surprises me is it's taken so long. The things that I thought that were going to happen that nobody else thought would happen, that are completely surprised that they're happening now. The only thing that surprised me is that it took this long for those things to happen. Peter, I think this is a Swedish kroner question. I don't know. Let me see. Peter, could the dollar milkshake theory go on forever? Approval would be the milkshake theories. No, I don't think it can go on forever. That's the bet I have, on the dollar going down with Brett Johnson. No, I think it can go on temporarily, but I don't think it's going to last very long because, we are the world's biggest debtor. America is the world's biggest debtor. We're printing the most money. I don't care that a lot of other countries borrow in dollars. No other country borrows more dollars than America. And we're broke. We can't afford to pay. And so we're going to keep printing dollars. And we run massive trade deficits. We are flooding the world with dollars. The world may need dollars now, but soon they're going to be awash in dollars. They're going to have all these dollars that nobody needs and that nobody wants. And the bottom is going to drop out and the dollar is going to crash. And it's going to crash hard and it's going to crash fast when it happens. Don't make sure that when you go to bed at night, you got your gold, you got your foreign assets. Because believe me, I think the dollar crash is going to start in our sleep because I think it's probably going to start in Asia. So people are going to go to bed wealthy and they're going to wake up broke. That's what's going to happen. Thanks for everything, Mr. Schiff. $10. If you had $500 cash saved, what would I do with it? Yeah, stock up. $500. You can go buy some silver at your local store, at your local coin store, pawn shop, or $500. That's all you have. Groceries. Fill up your cupboards, fill up your refrigerator. Hopefully, you don't have to wait online because if you don't have to wait online, you're going to have to wait online soon. Can I explain negative interest rates? Yes, I can. I can explain them. I mean, the central banks are holding interest rates artificially low, and they're holding them so low when the federal government, the central banks are buying up so much bonds and creating so much phony demand that the only way you can buy one, if for some reason you need one because you can't put money in, you can't have the cash, right? You're an institution and, you just can't take $10 million in cash and get it in, $100 bills, and the banks, you're worried about a bank. You don't want to put a bunch of money in the bank because the bank might fail. So you might figure, you know what? My best choice is just to lose a little bit of money buying a treasury bond with a negative interest rate. So you're just paying a small tax for a less likelihood of losing your money, right? So because you're going to risk losing money no matter what you do with it. If you take the cash, you risk losing it. Someone steals it. You don't know what to do with it. You put it in the bank could fail and you got to bail in. So you go for negative interest rates. But I mean, this is all crazy. I mean, because nobody would actually, no individual, right? Nobody is going to buy a bond with a negative interest rate. You'd be a complete moron. Why would you do that? You don't lend money to somebody for 10 years to get back less than you loaned. Why just use the money yourself? Why loan it for less? The reason you don't consume today, the reason you defer your consumption, make a loan, is because you're going to get to consume more in the future because you're getting paid interest. If you're paying interest to the guy who's borrowing from you, and so you end up consuming less because you made the loan, there's no incentive to make that loan. So this is the insane world that we live in. And there's that old expression, who the gods will destroy, they first make man. And that's kind of how you know that we are on the eve of our destruction, because we are clearly a nation gone mad. While I'm on that subject, before I get back to the questions, this reminds me of this $1 trillion coin idea that I meant to talk about earlier in this broadcast. But AOC and her crowd in the squad, they want to dust off the concept from the debt ceiling crisis. Of course, the crisis isn't the ceiling. That was the salvation. The crisis is the debt. The ceiling is what saves us from the debt. Yet they always claim we have to get rid of the ceiling because we have to pay our debt. No, the ceiling is what's supposed to make us pay our debt. We want to get rid of the ceiling so we can keep not paying our debt. That's why we have to keep raising the ceiling, because we keep not paying our debt. If we paid our debts, they wouldn't be going up and we wouldn't have to raise the ceiling. But the way they wanted to get around the ceiling is what they want to do now by minting $1 trillion coin. So people have asked me, what is this? What do you mean mint $1 trillion coin? First of all, why platinum? Why make it out of platinum? Why not gold? Well, the official price of gold is $42.22 an ounce. They can't mint a coin big enough to get $1 trillion gold coin without officially devaluing the dollar, which they don't want to do. So there is no set value of the dollar in platinum. So I guess they could just make it whatever they want. So they can officially set the price of platinum at $1 trillion an ounce. and they can print the 1 ounce coin. And now they have $1 trillion. The difference between that and the way they normally get money is the government borrows money from the Treasury. Now they can print up dollar bills. They can print ones, tens, and hundreds, but you can't go that far with that. So what they generally do is they want to spend stimulus money. They have to sell bonds into the market. And then the Federal Reserve ultimately buys those bonds off the primary dealers or out of the market, which they're doing now, and creates money out of thin air. And it's the money that's created out of thin air that the government can spend. But as money is being created out of thin air, the national debt is going up. And all that money is owed to the Fed, which holds all the government IOUs. Well, if you can mint the $1 trillion coin, then you don't have to do that. You just take the $1 trillion coin and then take it to the Fed like you would take a $100 bill to a bank and ask for change. So you basically go to the Fed with your $1 trillion coin and say, hey, I've got $1 trillion. I want to deposit this $1 trillion in your bank. I just like you to change it, please. And now give me ones, like give me cash in my account. So here's my $1 trillion coin. Give me $1 trillion that I can now use to pay people, because you can't pay the people with the coin. But if the coin is worth $1 trillion, then the Fed can take that $1 trillion coin on its balance sheet and create $1 trillion worth of IOUs that are now backed by $1 trillion coin instead of a government IOU. But the problem is when the Fed does that, they're actually insolvent, right? Because how much is that $1 trillion coin actually worth? Well, if it's an ounce of platinum, it's worth the market price of platinum. What is it? $1,200, $1,000? I mean, it's actually less than gold. So that's all they got. But the whole thing is a farce. It's a fraud. It's basically a way to allow the government to directly do what they're not supposed to do, what they're doing through the Fed, and which, of course, is completely unconstitutional, right? And the way the Fed is operating is unconstitutional, but nobody cares. But the idea is, hey, we'll just create these $1 trillion coins, and then we never have to have debt. We can just print as much money as we want, and we can give out as much money as we want. Yeah, they can print as much money as they want. They can mint $1 trillion coins until $1 trillion is what you need. I mean, pretty soon you'll need $1 trillion coin if you want.
People have been pulling their money out and moving it over to Merrill Lynch and putting it in a money market account where they can earn about 5%, which of course makes sense. The banks can no longer attract deposits. How do you have banks where you can't have depositors? Because they can't afford to pay the depositors any interest because they're broke, because the banks have already loaned out all their money for 30 years to the U.S. government or to American citizens. I've got a mortgage with that same bank. Bank of America has my Connecticut mortgage, and I'm paying 3.25%. And there's still more than 25 years left on that mortgage. They are eating it on that mortgage. They're losing a ton of money paying, only collecting 3.25%, right? And I warned about this as I had the mortgage, and as I was talking to people about this, and everybody was so excited about how great it was that everybody could refinance their mortgages. I just kept saying, it's great for the borrower. It's going to be a disaster for the lender. And of course it is. And the Fed doesn't want to put any more pressure on the banks by raising rates even more. It doesn't want to put any more pressure on the commercial real estate market, which has a massive amount of pressure on it already. So the Fed is looking for a reason not to hike. And so, they probably come up with one. But the minute they do this, I think you're going to finally see a drop in the dollar, like the next leg down in the dollar, which is going to spark a move up in commodity prices. The stock market already rose on anticipation of a Fed pivot, but we haven't seen any of that in the gold market. Gold prices, they did spike about $20 on that weaker than expected jobs report, or not jobs report, unemployment number that came out on Thursday. But we're still just trending sideways. We're holding below 20,000, 1,960. But we haven't seen an explosive move up. We haven't seen a big breakout in other commodities, oil, nothing. It's just been the stock market that has basically been the big mover, moving on anticipation of the change in monetary policy, moving from a tightening cycle to an easing cycle. But I think if the Fed doesn't hike next week, that could be the catalyst to get the dollar to resume the bear market or enter a bear market, get gold to break out and into new highs well above 2,000 and continue to move. And I think that is going to start to put a lot of upward pressure on consumer prices. I've been saying I think we're near the trough in year over year CPI, and I think we are. The last couple of CPI numbers have been worse than expected, meaning higher increases month over month, year over year. So we've kind of bottomed out at around this 5%. I mean, miles away, not even close to 2%. And then we're going to start heading up. And here's going to be the problem for the Fed. As inflation starts to pick up after they've already paused and as the economy is weakening, and especially if they've started to cut, right? So, because they may start to cut rates before the inflation numbers really start to get bad. But if they're not really bad before that first rate cut, they're going to get bad after it. And I think all this is probably going to happen, before the 2024 election. I'm going to talk a little bit more about that after I finish talking about this, because there's a lot of political news that has just come out. And I want to get to that. But I think that rather than the Fed fighting inflation, it's going to be the government that tries to fight inflation, but not in any way that's going to work. I think they're going to impose price controls. And that's already happening right now in France. I've been reading these news stories. In fact, I tweeted about one today that the French government has basically forced French supermarkets, right? So right now it's just in the food sector, and maybe it's going to spread to other segments of the economy. But the French government is applying financial pressure to the supermarkets, grocery stores, not only to stop raising prices, but to actually cut them. And I think prices are going to be cut maybe 2 to 8%, something like that, on all these different food items. Now, this is not the reason that there's an inflation problem in France. It's not because the grocery stores are gouging the people. It's because the European Central Bank gouged the people with money printing. That is why prices are going up. Christine Lagarde, Mario Draghi, particularly Draghi, because he was there for a lot longer, he kept saying that the problem in the Eurozone was that there wasn't enough inflation. His main goal as the head of the ECB was higher inflation. Well, he succeeded. The goal of the European Central Bank was for the cost of living to go up more because it wasn't rising enough, and that would include food. So the fact that food is more expensive is the consequence of a deliberate effort by the European Central Bank to increase prices, right? Well, they succeeded. And also, all of the budget deficits that are being run by the European governments, including the French government, which the ECB has been monetizing. So these supermarkets, they're not causing the inflation. They are responding to it. They are victims of it. In fact, many of these companies, and I own stock in quite a few of them, but a lot of these companies, even though they raised their prices, they didn't raise them enough. Their costs went up more. And the French politicians are now saying, hey, look, your input costs have been going down. Why aren't you cutting prices? Well, the reason is because they didn't raise them enough when the import costs were rising. In fact, initially, as costs started to go up, a lot of these companies were reluctant to raise prices. They thought it might be transitory. They didn't want to risk alienating their customers. And so they were behind the curve. And so now that some of the raw material costs are going down, you can't say, oh, we're going to immediately start cutting prices if we haven't even raised them enough based on how much their input cost already rose. But no, right? The politicians weren't, mad at the supermarkets for not raising their prices when their costs went up. But now they're pissed off that they're not cutting them when their costs went down, even though they probably still haven't raised their prices enough to keep up with their costs. Their margins have suffered. I know that as a shareholder. But what I've been expecting is for the companies to eventually catch up by pushing on, more price hikes. But now that's difficult, at least in France, because the French government is not allowing this to happen. And so this is going to have broad ramifications in France. The one thing it's not going to do is produce lower food prices, because what's going to happen is these grocery stores, supermarkets are going to have to figure out other ways to make up for this loss. And so the customer is going to feel it one way or another. They're going to find ways to reduce the quality, or they're going to come out with new cuts of meat that they can put a price on that won't be a price hike because it's a different product. They're going to repackage stuff. I mean, things are going to happen. Or, there's just going to be less supply. And maybe you're going to go to the supermarket and there's just not going to be enough stuff there. Maybe some of the items that these supermarkets are not allowed to price correctly, well, they'll just stop stocking those items. So they're not going to raise prices because they're not going to have the products anymore. And so that will have accomplished the goal of the French government. Prices won't be going up, but it won't matter because there'll be nothing to buy because the stuff won't be there on the shelves. So now the supermarket can say, yes, we didn't raise our prices because we no longer stock those items because we can't sell them profitably without the politicians, sanctioning us. But the reason I'm bringing up what's going on in France is because I think that's coming to a theater near us pretty soon, because that's basically all they're going to have. When the price increases start to accelerate after the Fed has cut rates, right? What are they going to do? The Fed can't reverse and start hiking rates if it's just started cutting them. And so if the Fed is powerless to do anything about the resurgent inflation, that's going to leave it to Congress, to the president, who might do it by executive order. And what could he do by executive order? Well, I guess price controls. That's what I think Biden is going to do, especially if he's looking bad in the polls. If inflation is a big issue, how is he going to do anything about it? Well, he's going to try to order companies to stop hiking prices or reduce prices, just like France is doing it right now. And that may be the only way to help his chances of being reelected.